I'm going to take a moment to go over a couple of pitfalls that sometimes happen in a real estate transaction that you want to be aware of. Now, on the buyer side of things, there's a lot of times where buyers, you get qualified to buy a home, but you're really close to being able to qualify based on what your debt and your income are. And sometimes I've seen people who get approved for a loan and they're very excited. They go out, they find the home that they want to buy. We're able to secure that property for them at a price that works for their budget, and everyone's happy. They go through the inspection process, the home checks out, they're moving toward closing, and at some point during this process, they decide that it would be fun to go and buy a new vehicle or get some new appliances for the new house, and they take out credit for that. Now, sometimes this isn't a problem. Every buyer is different and everybody makes different income and has different debt. But when you're real close on your debt to income ratio of qualifying or not qualifying, and then you add in new credit during the process, that can be a big problem. I had one client one time and we told them up front, like, don't buy anything new. And I guess they had amnesia or something, but they went and bought all new appliances from their home like 10 days before the closing. Well, this triggered an alert to the credit bureau. And then when the title company and the lender went to do final review of the file, they found this new debt on the loan, on the borrower's credit. And they said, loan denied. You can't get the loan because your debt to income ratio is over. That was really a rude awakening for this buyer, who then had to wait in order to be able to buy the property an additional 3 months. In that case, luckily the seller liked them and knew what they were working through and was willing to wait the time. But oftentimes the majority of sellers are going to say, I'm sorry that happened, but we're going to put the property back on the market and hopefully you can come back and buy it in the future. So my point in sharing this with you is, if you're considering buying a property, don't go get new credit for anything. Don't go buy appliances. Don't get a new car. Don't give your friend a small personal loan. Just be very careful about your money and keeping it in savings until after you've bought your home and closed on the home, which is the most important thing that you're working toward. You can buy a car anytime. You can buy appliances for the home every time, but it's going to be very difficult to find another home just like that for the price that works for you. That's the primary objective to be focused on. And then getting those other things after so that they don't mess up your credit is really important. And that's a pitfall that happens to a lot of buyers, especially new buyers who are maybe working with limited income, that might have debt from student loans or other obligations. It can be very close, the go, no-go decision on getting approved for the loan, and you don't want to do anything that would push it over the other way.